Welcome to Nifty Trade Setup channel, and this is a very important learning video about setup that I've used it in the recent days of this bearish market, and I hope this is also going to be helpful for you for your learning purpose. This is important learning video. So, welcome you all. Um, as a disclaimer, take a proper risk management as it is a market is financial market is very volatile and high risk involved, right? So take a full responsibility and then risk management before you make any entry to the market. So so this is what the rules and that we will be talking about today, so that this all combines to have a rule as a setup, so that you make a proper entry and then exit following these rules accordingly, right? So as we see that this is applicable only for as a intraday. So we are talking about we take a trade today and close it today only. So we, as we all know, and it is going to be in a 5 minute chart, and it's basically we are looking only in Nifty. So this is the basic that we are talking about, and completely all the below rules that we are going to talk about all in this Nifty only. The first point that we have it is 1 hour trend. So downtrend. We are looking for 1 hour downtrend. How do I identify? That's a very good point. That how do you identify downtrend in a Nifty market? So basically, what we're looking for is the market should be below exponential moving average 21 day. So that is what the first rule we are talking about. So let's see like how does it look like in the chart, right? So let's draw go to the 1 hour chart, and since I have already drawn, so this is what it shows actually. So I have already put a exponential moving average, 21-day average, and the market should be trading below this one. So I'm just selecting the uh, complete range where it started trading in this 21 complete 20 all this bearish market starting from the market when it entered into the bearish zone, right? So I'm just blocking it so that it is easy to identify the market we are going to back test and see. And we can see that it confirms. One of the points is that it confirms that in 1 hour trend, as the market is below this 21-day EMA, so we confirm that this is a bearish market that for a intraday. So the first rule we are meeting it, and second thing is we need to draw lines which we call it as resistance and or the support based on the market when we are going to start trading. So for example, we need to mark these four lines in the previous day. For example, if I am going to trade on August 11th, we need to draw these four lines the day previous, meaning I need to draw these lines on 10th August. So I'm choosing the horizontal line ray to mark the highs, and then open and low and close. So I would drawn these four lines which will act as a resistance basically because we are in a bearish market. So I would drawn these lines. So third one is we are expecting a 5 minute red candle. As we are planning to have a bearish setup, so we are expecting a red candle, first candle or any candle, red candle that has to close below this one of these lines that you have drawn, or close to these lines. I mean, a red candle forms below this one of these lines. That's the first condition. And the next condition about this candle is that it should come below this EMA 21-day average in a 5 minute chart also. Meaning, first condition it is 1 hour, it should be trading overall, should be trading below 21-day EMA in a 1 hour chart. That is a primary condition. For an intraday setup, this 5 minute candle, red candle, should trade below this one of these lines that we have drawn as a resistance. Also, should also cross and close below this 21-day EMA average in 5 minute chart as well. So this satisfies our condition, and after this candle close, probably we can go for an entry. And we can see the next thing is it gives 60 to 80 points, close to that. So if you see, measure that how many points it has given, it has exactly has given 80 points as a target. So that closes our thing, like entry and the target. Coming to this stop loss, so we if you see this candle is very big. If you want to close or keep the stop loss above this candle, then the risk, we would get a poor risk reward ratio. So what I would suggest is that keep 50% of this candle as your stop loss, so that you have a better risk reward ratio. In this case, even the market did not try to test the stop loss or hunt the stop loss. It went to the target, right? So this one that I could we could see it immediately that happened on a Friday. So let's look at it this before one, right? So this is like another 10th hours also works out really well actually. If I want to trade on 10th, if I want to trade on 10th, this is one of the back tests that I'm taking it. So I'm drawing the high, I'm drawing close, low, and open. So we've drawn all these four lines and see how the market behaves in this scenario. See, the first candle it opened, and though it meets the two conditions, both the conditions it meets, right? It has closed below this one of the lines that you have drawn, and also the EMA average of 21-day. But in this case, you have seen that it is slightly uh, hit the stop loss. Probably, like if you see the number of points that you are giving us a stop loss is close to 40 points. So probably we can take a stop loss here and probably wait for another setup that is possible. And exactly it is I think not probably a clean day for our setup. Or if somebody is ready to take a higher risk, probably they can wait for this market closing above one of the lines that you have drawn. So in this case, if you take a little higher risk, probably it has given again 80 points of target. So if you measure, it has given to 60 plus points, 70 points it has given as a target, or 80 it has given completely. May not be a clean setup that we have it, but if we are like working for a longer time in this market, then probably we can see that we want to have a clear close of this candle close above this opening candle, and or this candle above, and that could be a stop loss to come out of the market, right? So but otherwise it has given a clean setup for 80 points of target. So this is this second back test that we had, or I could say that this could be a risky one. Like we can give, like if since it is a 40 points, probably we can could have given our SLL as 50% of this candle come out. That's possible. And I'm going back to one more day before. So I'm trading on 9th August. So I'm going to draw these lines on 8th August, right? I have drawn high and open, low and close. So if you see that the first candle red candle bearish setup, it has closed or closed or crossed this our two conditions, right? One is it is crossing the close previous day close, as well as it is crossing the EMA is 21, right? So it is closed both, and our main entry is here. So if we measure what is the target it has given, it has given exactly 70, close to 80 points it has given again. So that kind of thing we have it. And this, as I said earlier, if the candle is size is more than 30 points, 35 points, probably we can wait for 30-point max, or if a candle is really bigger of 60 points, we can take 50% and give a stop loss. This, considering this setup, so this looks to be a great setup that we had got it on this particular day. So this is a third back test that you have it. So I still can go back, right? So another setup. So like if you look at on this 8th August, we need to draw lines of 7th, or like 7th, right? So I'm drawing again the open, low, high, and close. If you see that the first candle on 8th, red candle has crossed this one, and we can't give an entry right now, right? So we need to wait for the second rule that it has to match. So the second candle, it closes below this 21 day EMA. So this satisfies it is closing below this one of the previous day lines, and also the 21 day EMA. And it like if you look at it, 30 points that we are looking for a stop loss, it has not hit our stop loss, and it has given us close to 60 point, 50 points it has given as a target for us. So this is another day, probably like, or if you want to strictly wait for this target 60, probably it will just 5 points away from that one, and market has kind of reversed, right? So this, we could see a not 100% a clean setup, but at least 90 to 95% of a clean setup. And coming scrolling back further, right, we could see that there is one here, there is one here, this is previous day close. The market is coming down and also crossing the EMA 21, right? So and stop loss is above this one, which is less than 30 points, and definitely the target is more than 80 points. It has given three times of or three times of our target, right? So probably we can come out at 80 points itself, that we are looking for max that it can give, this setup can give, right? So this is one. And come another one, like if you draw this previous day low, if you're planning a trade on August 2nd, and if you're drawing the previous day lines on 1st August, the market is below this 21 day EMA, as well as it has already all the lines below all the lines that you have drawn. First candle is below that, and the stop loss is definitely above this first candle, and it has given definitely more than 80 points. So another, this is another great setup that you had got it, right? So this, if you see that like continuously it has been giving, probably you can also do your back test before taking any entry into the market, and then probably give your comments uh, below this video, right? So So hope you like this video, and you can forward this channel to your friends, share with your friends, and then subscribe to the channels and like the video for me to take up the next setup and provide you the in next videos, right? Thanks for watching this video.